Good day, everyone. We are pleased to present our research study entitled Effect of Market Capitalization and Fundamental Factors on Fair Value of Publicly Listed Property Companies in the Philippines from 2014 to 2023. Given the increasing interest of investors, managers, and policymakers in value-based decision-making, this study aims to provide empirical insights into determinants of fair value among publicly listed property companies in the Philippines over a 10-year period. In this study, fair value serves as dependent variable, allowing us to assess how market capitalization and selected fundamental factors affect the overall valuation of publicly listed property companies in the Philippines. To measure fair value, this study utilizes Tobin's Q. Tobin's Q is a financial metric that compares a fair market value to the replacement cost or book value of its total asset. Specifically, it indicates how the market value of a company is relative to the asset it controls. A Tobin's Q value greater than 1 suggests that the market value of a firm is more highly than the cost of its assets, implying strong growth opportunities and positive investors' expectations. Conversely, a value less than 1 may indicate that the firm is undervalued or not efficiently utilizing its assets. Tobin's Q is widely used in empirical finance research because it captures both market perceptions and firm fundamentals, making it an appropriate and reliable proxy for fair value in the study. This study focuses on understanding how internal firm factors influence fair value, particularly in the context of Philippine property companies. Fair valuation in the real estate sector is complex due to the uncertain income streams and rapid market value changes, even with the increasing demand for residential, commercial, and industrial properties. Because of this, our study aims to examine how market capitalization and key fundamental factors, specifically firm size, free cash flow, and dividend policy, affect the fair value of property companies listed in the Philippine Stock Exchange or PSE. By doing so, we seek to provide a clearer understanding of what drives fair value within the Philippine property sector. Because of this, our study aims to examine how market capitalization and key fundamental factors, especially firm size, free cash flow, and dividend policy, affect the fair value of property companies listed in the Philippine Stock Exchange or PSE. By doing so, we seek to provide a clearer understanding of what drives fair value within the Philippine property sectors. This slide presents the descriptive statistics of fair value measured using Tobin's Q from 2014 to 2023. Each year consists of 33 firms, resulting in a total of 330 observations. The table shows the minimum, maximum, mean, and standard deviation of Tobin's Q per year. Overall, the results indicate that firm value varies across firms and over time, reflecting differences in the firm performance and market conditions. We can also observe periods of higher volatility, particularly in years with higher maximum values, suggesting stronger market valuation for certain firms. These statistics provide an important foundation for our analysis as they describe the behavior of firm value before examining how it is influenced by the identified fundamental factors. This slide presents the descriptive statistics for market capitalization from 2014 to 2023. Each year includes 33 firms, giving us a balanced panel dataset. From the line graph, we can observe that market capitalization generally increased from 2014 and peaked around 2018 and 2019, followed by a decline during 2020, which may reflect market uncertainty and then a moderate recovery afterward. The data shows that the mean fair value increases steadily until 2019, indicating that firms with higher market capitalization tend to exhibit higher fair value. However, the standard deviation is relatively large, suggesting substantial variation across firms. Overall, the statistics indicate that market capitalization plays an important role in explaining differences in firm value over time. This slide summarizes the descriptive statistics for firm size. As shown in the graph, firm size remains relatively stable over the study period, with only slight increases across the years. This suggests that most firms in the sample experience gradual growth rather than abrupt changes. The firm size consistently ranges around 10, while the standard deviation is low, indicating less dispersion among firms compared to market capitalization. This stability implies that firm size is a structural characteristic and its effect on firm value is likely consistent rather than volatile. This slide presents statistics for free cash flow. The graph shows noticeable fluctuations, especially negative values in the earlier years, indicating that some firms experienced cash flow constraints. However, from around 2020 onwards, the mean free cash flow turns positive, reflecting improved liquidity. The descriptive table confirms this pattern, with the mean shifting from slightly negative to positive values in a declining standard deviation over time. This result suggests that improvements in free cash flow may contribute positively to firm value, particularly in the later years of the study. This final statistic slide focuses on the dividend payout ratio. The line graph shows significant volatility with extreme minimum and maximum values, indicating that dividend policies vary widely across firms in years. The table further supports this, as the standard deviation is relatively high, showing large dispersion in dividend decisions. Despite this variability, the mean dividend payout remains positive in most years. This suggests that while dividend policy is inconsistent across firms, it remains a relevant factor that may influence firm value differently depending on firm-specific conditions. Based on the findings of this study, several recommendations are proposed. First, real estate companies may strengthen their market capitalization by improving operational performance, prioritizing economically feasible development projects, and maintaining strong relationships with investors. These strategies can help enhance firm value over time. Second, firms are encouraged to manage asset growth carefully. While expansion is important, uncontrolled growth may lead to diminishing returns. A more strategic approach to asset management can support long-term sustainability. Third, companies should focus on optimizing free cash flow through prudent investment planning and disciplined cost management. Efficient cash flow utilization was found to contribute positively to firm value. Fourth, although dividend policy was not a significant determinant of firm value in the study, maintaining a clear and consistent dividend policy may still help sustain investor confidence, especially during periods of market uncertainty. Finally, for future research, it is recommended to examine additional financial and non-financial factors such as profitability, corporate governance, market sentiment, interest rate sensitivity, and microeconomic conditions to further explain variations in firm value.